Hi, in this video we will see one of the strategy which is called butterfly. Okay, so I'll show you how to create a butterfly strategy. So I'm doing this with Nifty and Nifty 31st March expiry. So currently Nifty is trading at 17,150 spot price. So what I will be doing here is 17,200, or I can take 150. Okay, 17,150 call. I will sell 2 lot. Okay, and 17,250 call, I'll buy 1 lot. Okay, and 17,050, which is 100 points away from the current price, I'll be buying one more. Okay, one more option. See here, 17,150 the current price, the market is at 17,150 at the money price. So you'll have to sell 2 at the money. Okay, at the money call option, 2 at the money call option, and you have to buy 1 at the 1 out of the money call option and 1 in the money call option. I have explained what is this at the money, in the money, out of the money call options or put options in my previous videos. You can go and watch if you are not sure what is this OTM, ATM or ITM options. So here the advantage of doing this butterfly strategy is your loss is very less, very minimum. Okay, and your risk reward ratio is 1 is to 14.3, which is way higher than any other strategies. Okay, so your risk is 1 rupee. So if I have to explain this risk reward ratio, this is like if you are losing 1 rupee to make 14 rupees. Okay, if your view goes wrong, you will lose 1 rupee, and if your view is right, you will be making 14 rupees 37 paise. So that is the loss here. So your view, if your view goes wrong, you will be losing 322 rupees, but if your view is correct, then you will be making 4,628 rupees. In case if market stays in this zone, which is from 17,050 to 17,243, if market trades in this zone, you will be in a profit. Okay, and the margin required for this strategy is 34,653. Now this is called as butterfly strategy on call side. This butterfly strategy, it is not required that you have to do it with at the money only. You can do it with out of the money also. Let's say 17,150 is the current price. Now you expect the market will go to 17,300. Then you can sell 17,000 call 2 lot and buy 17,400, which is out of the money call 1 lot, and 1 in the money call, which is 17,100, 1 lot buy. Okay, so your 1 minute, 17,300, 17,400, sorry, this should be 17,200. Okay, 17,200. Now this is how your strategy looks like. In this you will lose 488 rupees, but if your view is right, you will make 4,400. Now market is at 17,150. Okay, and if you expect the market will go and close around 17,200, 17,400 range, sorry, 300 to 390. If you expect the market will close between 17,210 to 17,390, then you can initiate this transaction. Okay, this strategy. Then if it closes in this green zone, then you will make a profit. The one of the main advantage of doing butterfly strategy is your loss is very less. You know what is your loss is, and you don't have to keep tracking where the market is moving on. You can just initiate this strategy and just leave it. You can see at the time of expiry where it is. If it is in the profit, well and good, you can close it. Okay, so this you can do with put also. I'll show one example how to do put butterfly. Now I'll be taking market is 17,150. Now I'll be taking 17,150 put options. Okay, sell 2 put option and buy 1 in at the money put option, which is 17,250, or you can take 17,300, whichever you want you can take. Okay, 17,300 by 1, which is 150 points higher. Okay, and 17,000 put option by 1 lot. So your strategy will look like this. If you increase the gap between the sold option and the bought option, then your loss will also increase a little bit. I'll show you. Now this is put option. In this your loss is 905, but if your view is right, then your profit will be 6,500. If you're just increasing this gap, which is like 150 out of 150 to 17,150 to 17,300 is 150 points gap. If you increase this to 250, which is 17,350, which is 200 points. Okay, so you increase this to 200 points and 16,050. No, 1 minute. 17,150 17,150 plus 200, which is 350. Okay, 17,150 minus 200, 16,950. Oh, sorry, 16,950. 16,950. Okay, so your strategy will look like this. You can see your loss is increased, and same way your break even will also increase. So now you are covered from 16,983 to 17,300. But if your view goes wrong, you will lose 1,625 only. Anywhere, if market goes lower or higher, then you will make only 1,625. Sorry, you will lose only 1,625. But if your view is correct, and if market expires exactly at this point, which is 17,150 point, then you will be making 8,300. Okay, your risk reward ratio is 1:5.12, which means you are ready to lose 1 rupee to make 5 rupees 12 paise, and your estimated margin in this strategy is 35,686. The margin required for this strategy is very less. Okay, and this put butterfly you can do with not with OTM option or ATM option also. Now I have done with at the money option. You can take 200 points higher or 200 points lower. You can sell and then buy the two different legs as an edge, but you should buy this edge legs so that your strategy will become a risk defense strategy. And this strategy you just have to implement and just leave it. You can check because you know what is your losses, so you can just leave it and check at the time of expiry where the market is and what is the profit or loss. And this strategy you have to implement when the market is in sideways. Okay, so mainly sideways. If market is in trending, then the chances of making profit is very less, because the market will be going one way. Then you will be not able to shift this legs. So it is better if you feel the market is in sideways, market is not moving anywhere, just 50-100 points changes doing every day, then you can implement this butterfly strategy. You can do it with call or put butterfly. Okay, if you have any doubt, please comment. I will explain. Thank you.